Hey everybody, it's Jeff back with our weekly installment of the Silver and Gold Market Update. I create these every single week to attempt to have a physical track record of both physical premiums, the paper markets, the hedge funds, and the charts, and also give my opinion on where I think silver and gold can go from being a full-time commodity trader. I try and analyze it in a way that I analyze the other markets that I trade. There's been rumors circulating over this idea of the second silver squeeze. And if we all remember how the first silver squeeze went, not so good. It lasted all of a day and a half in the paper market, and then it just fell back down. Now, physical premiums elevated and stayed elevated. So I worry a little bit about this one because anytime something is so telegraphed, it's really kind of a sucker play. So I would be cautious about diving in, buying a ton of physical silver, maybe more than you're comfortable with to kind of quote unquote get the suits or get the guys in Wall Street. I've read up on this Silver Squeeze 2.0, essentially the contracts that are coming due for physical delivery. So if you buy one futures contract, you could take physical delivery of silver. And if you buy silver futures at, say, $26 an ounce in physical silver, the actual silver rounds are selling for, say, 35. That's a $9 spread. Why wouldn't you want to take delivery? So that's essentially what the market is watching this week, is to see if there's going to be a bunch of physical deliveries through the COMEX, and can they handle that? The thing is, if that were true, because how commodity markets work, and I trade mainly grains, corn, beans, wheat, anytime you get to what's called first notice day, which is the day before physical delivery takes place, if somebody is really in a bad position, you see that trade happen what would be today for silver. And silver was effectively flat. So I am very skeptical of this concept of silver squeeze 2.0, and I would be cautious if your goal is to go out and buy a ton of silver more than you're comfortable with to quote unquote get the suits. So just be wary. We'll see what happens. I also notice on the APMEX website, they removed the due to strong demand, expect delays in shipping. The fact that they removed that, I find interesting. I've called around to some dealers. They said that buying is definitely slowed down, but there's still not that much physical silver. So it almost feels like we're in this moment in time where actual physical availability, the supply of the physical silver is not there, but the demand is perhaps slowing. Simply because we've seen these prices now for many weeks. I think anybody who wanted silver probably already bought it, and everyone just kind of sitting and waiting to see what happens. So I think it's actually a good thing for gold that Bitcoin is finally struggling here, struggling to rally. For all of the beginning of the year, I think January through March, Bitcoin pretty much went from lower left to upper right. And since everybody calls that the digital gold, that was a huge weight on actual gold futures, because I think a lot of people who were in gold and saw that start to go down took the money out of there and went to Bitcoin as the quote unquote store of wealth. So the fact that Bitcoin is actually struggling here is, in my opinion, a good thing. So looking at the week over week, as you can see, the silver spot is pretty much unchanged. We've been sitting in this $25 to $26 range for many weeks now, kind of going nowhere. The APMEX price is about the same. You can see the premiums have actually edged up just a little bit, but haven't quite gotten back to their, I think, peak of around $12 premium. But they're not going down. So JM Bullion is also at 1070 over for Silver Eagles. And the hedge funds continue to add here. So I don't know. It's interesting to see that the hedge funds are adding to their length, almost double their length, and yet we can't get the actual silver spot price higher. So one could say maybe it is manipulation, but I just struggle to see why silver hasn't rallied more than it really should. And you look at the chart, and we're just kind of stuck here in this range. And I worry a little bit about maybe the physical demand just slowing down just barely. But we'll see. Looking at the dollar, another hugely important factor on both gold and silver, since they're priced in US dollars. As the dollar gets weaker, or in other words, goes down on this chart, that's a bullish sign for gold and silver. And for the most part, we're going weaker all of April, and then just recently turned up interest rates have largely remained flat, so it's kind of a no man's land on the dollar chart. So I don't know. I'm kind of in a neutrally bullish mood. I don't think we're going to go down much. I guess we'll just have to sit and watch. As I said, I'm skeptical of this silver squeeze 2.0 because it's been too telegraphed, and we didn't see any short squeezes on the futures market coming into first notice day of supposed shorts trying to manipulate the market, having to get out and panic. The fact that they haven't should be somewhat telling. Looking at gold, the gold chart on the next slide is going to be the most interesting, but for the most part, premiums are slowly inching lower, as you can see, down to 170 over. Gold futures have inched up just a little bit over time. AMEX did actually jump up to 180 over, which is up $15 an ounce since the last time we had this. But funds don't seem all that interested to add to their gold long. So I guess funds are more interested in adding to the gold or the silver long versus the gold. Looking at the chart, and this is important if you ever trade the paper market, which I don't know how many people will who watch this, but certain times, certain chart points are extremely valuable. And as you can see in that circled area was the late November, December low. And then when we broke that early March, that was a really bad sign. Well, we broke back above, which was a really good sign here recently, and we're testing it yet again. So typically this is a buying opportunity from a paper market with a tight stop at that 1762. If you were to trade it, that would be a good trade. But I don't know. It's hard to get all that excited right now because everything just kind of feels like it's range bound. Not that much interest in silver and gold, despite almost all other commodity markets just rocketing higher. It's kind of frustrating to see a lackluster response in gold and silver. So that's all I have for this week. Thanks for watching. Take care.